Trump 2.0, what it means for markets, the dollar, and global finance. Donald Trump is back. Love him or hate him, his policies are once again reshaping the global financial system. Within weeks of his return, the US dollar declined by over 10%. Foreign capital withdrew from American equities, and entire sectors, from defense to clean energy, began realigning. In today's episode, we unpack how Trump's second term is impacting the economy, the dollar, global markets, and what it means for your money. Let's start with the dollar. Since January 2025, the US dollar index has dropped over 10.8%. That's the worst first-half performance since the 1970s oil crisis. Why? Investors fear that Trump's protectionist policies will isolate the US economically. He's already floated a 10% across-the-board tariff on all imports and a 60% tariff on Chinese goods. Currency markets are reacting to that. A weaker dollar typically boosts exports, but also makes imports more expensive, fueling inflation. It's no surprise that gold is up 25% this year, and the euro and yen have gained strength. Some countries are even reducing their reliance on US dollars in trade. China and Brazil, for instance, are increasing yuan-based transactions. A quiet shift that could reduce global demand for the dollar in the long term. Trump's return also means one thing for markets: tariffs. In just a few months, he's reintroduced aggressive trade rhetoric, especially targeting China, Mexico, and even the EU. For example, a proposed 50% tariff on steel imports could increase construction costs across the US, directly impacting infrastructure and manufacturing stocks. But there are winners too. US-based manufacturers, defense contractors, and energy producers are seeing investor inflows. Lockheed Martin is up over 70% year-to-date, and Northrop Grumman isn't far behind. On the flip side, tech stocks are being hit hard. Apple, which relies heavily on China for assembly, dropped nearly 12% in just one quarter. Tesla and Nvidia also took hits, not just due to trade, but because Trump's rollback on climate policies is causing clean energy funds to bleed. So who's gaining and who's losing in Trump's economy? Let's break it down. Winners: defense, Lockheed Martin, Raytheon, and Palantir are booming due to increased military spending. Fossil fuels: Trump is removing Biden-era restrictions on drilling and pipelines. ExxonMobil and Chevron stocks surged 30 to 40%. Private prisons and border security firms are rallying on expectations of stricter immigration enforcement. Losers: renewable energy, the Inflation Reduction Act may be dismantled. Solar and EV companies like First Solar and Rivian are under pressure. Big tech: ongoing antitrust threats and overseas tension are making investors nervous. Housing: mortgage rates are climbing again due to inflation fears and debt supply surges. The uncertainty in U.S. markets is causing a global rotation of capital. Funds are flowing into what analysts are calling Trump hedges, economies that stand to benefit from America's slowdown or tariffs. India's Nifty 50 index is up 18% year-to-date. Brazil's Bovespa and Germany's DAX are also attracting attention. Investors see opportunity in economies with strong manufacturing, raw materials, or stable governance. At the same time, international banks are increasing their gold reserves. The People's Bank of China added over 300 tons of gold since January, a clear signal of hedging against U.S. instability. So what's the big picture? According to Goldman Sachs, the U.S. GDP could slow to 1.4% in the next 12 months if tariffs escalate. Morgan Stanley warns of an earnings recession in Q4 if interest rates remain elevated and inflation ticks up. Yet some analysts are cautiously optimistic. They believe that deregulation and tax cuts may boost short-term corporate profits, especially in the industrial and defense sectors. Inflation expectations are now climbing again. The 10-year Treasury yield breached 5.2% in June, the highest in 15 years. That's already pressuring real estate and pushing capital into money markets and tips. Crypto, on the other hand, is seeing renewed attention. Bitcoin hit 100K briefly before correcting to 78K, fueled by inflation fears and anti-establishment sentiment that often rises during Trump's tenure. Now let's talk risks. First, geopolitics. Trump has openly criticized NATO allies and hinted at pulling back military support, which could destabilize global alliances. Second, the Fed. With fiscal spending set to rise, the Federal Reserve may be forced into another rate hike cycle, even if the economy slows. This policy mismatch could cause recessionary shocks. Third, U.S. credit rating. Agencies like Moody's are warning that another debt ceiling crisis could lead to a downgrade, increasing borrowing costs and hurting bond markets. Trump's second term is not just a rerun of his first. It's more aggressive, more targeted, and already shaking global markets. Whether you're an investor, a business owner, or just someone watching your grocery bill rise, the impacts are real. For some, it means opportunity, for others, volatility, but for everyone, it means paying close attention. If this deep dive helped you understand the Trump 2.0 economy, hit that like button, subscribe, and drop your thoughts in the comments. And keep watching. See you in the next video.